this thing is flying.
Order filled.
Yep, that's me. You're probably wondering how I ended up in this situation.
Finding easy ways to make money online is kind of my thing, so I wanted to find out if trading is something I can add to my arsenal. It's quite popular, but I've put it off for so long because of a story involving a conversation between an economics professor and a technical analyst. Shortly into the discussion, the economist unfolded a piece of paper and handed it over to his friend who reads charts for a living. He looked at this chart and his eyes lit up. "What's this company?" he asked. He takes out his pen and starts working his magic on the chart, making labels and drawing trend lines. "We gotta buy this. Immediately. Have a look. It's a beautiful upward breakout from an inverted head and shoulders pattern. There's no question the stock is gonna be up 15 points next week." Now, if the chart did go up, would you say it was because he was lucky, or was it because of his expertise? To answer that question, we need to back up a few days earlier. The economist was teaching his class a concept called the random walk theory. This theory states that stock prices move unpredictably, so that past prices cannot be used to accurately predict future prices. So he had his students participate in an experiment where they were asked to construct a hypothetical stock chart with a starting price of $50. For each successive trading day, the closing stock price would be determined by the flip of a coin. If the toss was heads, the students assumed that the stock closed half a point higher. If it was tails, the price was assumed to be down by half. They flipped the coin over and over again until the whole chart was filled out. Despite the chart being formed out of random coin tossings, they highly resemble normal stock charts, and many of them even appear to display cycles. Some of these charts even look like they have uptrends, so it's not as if you'd be able to reliably predict whether or not a 50-50 coin toss will continue to flip heads multiple times in a row. Some of the charts had head and shoulders formations, triple tops and bottoms, and other more esoteric chart patterns, and one chart even showed a beautiful upward breakout from an inverted head and shoulders pattern. So this was the chart that the economist took with him. He put it in his pocket, and this was the one that he showed his technical analyst friend. So if he did predict correctly, it would have been by pure chance. The economics professor's name was Burton G. Malkiel, and he was also the author of the book A Random Walk Down Wall Street.
Active managers charge very much more than passive managers. And because there are costs in moving from security to security, it is too much to expect them to outperform a passively managed index. And the fact of the matter is, they don't.
Apart from his experiences, there were many other experiments that also came to this conclusion, including the time when a Russian circus monkey named Lucia outperformed 94% of the country's professional investment funds. Furthermore, over the last decade, 83% of fund managers underperformed the S&P 500.
79% of fund managers underperformed their benchmarks. Over 10 years, 86% underperformed. Don't get much worse than that.
But wait, there's more. According to several studies, 90 to 97% of day traders lose money. With that being said, this whole industry just feels like glorified gambling. If people who study this stuff for years can't beat the market, then what even is the point to all of this? Among the countless make money online categories, trading is certainly one of the most popular communities. And for most that claim to make money from this, I personally get the sense that they only show their wins and not their losses. That's not to say that it's not impossible to make money from this. In fact, I'm very well aware that many people have even experienced life-changing amounts of money from participating in trading. But people also make life-changing money from winning the lottery, which is statistically nearly impossible. The next time you go on a car ride, statistically you have an approximately 1 in 7 million chance of getting into a fatal accident. For any single lottery ticket, your odds are 1 in 302 million, which means if you had purchased a lottery ticket every single time you entered a vehicle, you are 40 times more likely to die from that very car ride than you are to win the jackpot with a ticket. You don't enter a car ride with the expectation of dying, yet millions of people still buy lottery tickets with a slight expectation of winning one day, despite the near impossible success rate. There are still people that win. I digress. The point I'm trying to make is that despite all logical assumptions from these statistics, millions of people will continue to gamble. But you know what's weird? There's many traders in the community that sometimes boast success rates of over 75%. This straight up sounds impossible and unrealistic, especially considering everything that I've said up to this point. Let's be real. How likely is it for some Discord traders to outperform the market, which even professionals can't do? Polar Chefs, my reselling Discord group, hired some of them to see if there's any truth to their claims. By the end of this video, you're going to be very surprised by the results. I'm personally going to be diving into this, and I have very high hopes, but very low expectations. Especially considering I don't know anything about trading except for the statistics and the stories that I spoke about earlier. So, over the weekend, I tried to learn as much as I can. For now, I'm only going to be diving into stocks and options. I won't be touching cryptos or NFTs for now since I don't want to spread myself too thin. My goals over the weekend is to, number 1, learn the basics of what exactly it is that I'm trading. Number 2, learn how to properly execute trade signals from the traders that we hired. And number 3, get familiarized with the trading platform that I'll be using, which is Thinkorswim. Simple enough. For the first week, I'll be using a simulation account, which basically means I'm only going to be trading with pretend money. That way I can really learn how to use a trading platform and just get into the gist of how everything works without risking any of my own money. By default, you start off with 100k, but I'm not going to be using anywhere near that. I'm going to be taking this seriously as if it was my own money and as if I only had 4 or 5k in the account. Therefore, all the trades that I'm going to be doing will only be around $200 to $1,000. So no crazy YOLO trades. Ready, set, go.
No worries, you'll bounce back.
Bro, I am up so much.
Congratulations.
At the end of the week, the results are in. $524 in Monopoly money before fees, and after fees, I believe it's closer to $340 to $400. As expected, there were some winning trades and some losing trades. I simply just need to win more than I lose. Because of my inexperience with this trading platform, I had missed several trades that went parabolic, which means I could have made a lot more money. And now, I think it's time to use real money. But that's when I ran into my first obstacle. There's this thing called the pattern day trader rule, where if your account balance has less than $25,000, you can only make up to 3 day trades in a 5-day business period. So if you plan to get into this with less than $25,000, it's still possible, but just keep these restrictions in mind. Luckily for me, I do have the funds to transfer into my brokerage account, but instead of 25k, I'm gonna transfer 28k, because on the chance that my account balance dips below 25k from a few bad trades, then I'm back with the restriction, so I want to leave at least some margin of error. And now we wait for Monday, which is the next trading day. Today was supposed to be the first day I was trading with real money. However, the funds still needed to settle in my account, so unfortunately, we gotta just continue with the simulation today.
Order placed. Order filled.
Oh my god, dude, that play was beautiful. Immediately up $100. Holy shit, bro. This is awesome. Okay, it is not the end of the trading day yet, but I did close all of my positions because The money has finally settled into the account, and I'm ready to do it for real this time. I made about $500 in pretend money today, and after fees, my total profit for this simulation trading is $752. And also, I have made a couple of scripts that would really come in handy. The first one is a Python script that automatically translates these trade signals into think or swim format. So I can very quickly get to the desired chart just by copy and pasting their signal without having to go through this very long drawn out process, ultimately allowing me to execute these trades a lot faster. I'm a little bit nervous, but hopefully it all works out. I mean, so far so good, right?
Order filled.
There we go, my order got filled. Bro, this thing is flying.
Order filled.
Alright, man. Today did not go the way I wanted it to. Down about $350, but that's just the way it is. You're gonna win some, you're gonna lose some. Unfortunately, for my first day trading with real money, it was a losing day. Because days like this is just normal. It's important not to try and do more in an attempt to try to make your money back. Just gotta trust in the system, and hopefully tomorrow is a better day. I didn't know this at the time, but the term for what I'm describing is called revenge trading. And apparently it's how a lot of beginners sometimes just lose all of their money. Before I sign out for today, I am gonna enter into a few more positions. Oh my God. I ended the day negative 289, which is better than negative 350. We'll see what happens tomorrow. Alright, market is about to open in 1 minute. So we'll see if right off the bat, we're gonna make some money or lose some money. Oh, hell nah. Bro, that went up by 150.
Order filled. Order filled.
So today I lost around $200, but honestly, that is like a godsend. Because earlier, at one point, I was down 800, which is insane. Then I ended up recovering a bit. Now I'm only down 466 in total between yesterday's trading day and today's trading day. At this point, I'm looking at my trades and I'm thinking to myself that there should be no reason some of these positions are losing 70 to 80% of its value. And that's when I realized that win rate is completely irrelevant without proper risk management. Even with a 70% win rate, without proper risk management, losing money is still very easy. Let me illustrate it for you. Suppose you enter 10 positions at $300 each. 7 of the 10 positions, you lock in 30% profits, and for the 3 losing positions, you incur a 80% loss. In this scenario, with a 70% win rate, you still lose. So this is when I realized that risk management isn't as simple as don't invest more than you're willing to lose. Because if I don't have a proper risk management strategy, I'm certainly gonna lose money even under the best of conditions. So that's when I started to do more research on risk to reward ratios. The content that I was consuming was mostly for Forex trading, so I was just trying to learn the concepts and I'm trying to think of ways I can realistically apply this to options trading. I didn't come up with anything yet. All I'm certain right now is that 60 to 90% drawdowns are pretty common with options trading. So for now, I'm just deciding to size down on all of the trades that I make. Instead of taking $200 to $1,000 positions, I'm only gonna start to do between $100 to $400, but mostly between $150 to $300. Okay. Oh. Bro, what is that? I got you baited.
Order filled.
Locked in some profits. Holy Dude, this went up like crazy. I'm not gonna greed too hard. I'm gonna exit my position around here. 99.
Order filled.
It hit it. Okay. I'm out of my Moderna position. Made $200 off that.
Order filled.
Nice. MU is going up.
Order filled.
Bro, that was looking so spicy. But I lost almost $200 off of that. It's all good. We're still up 125 today. And it's done. Today I've decided to go a little bit off script, meaning that what I'm about to do was not called out by the Discord. I saw the price action of QQQ and it was just doing this very quickly. So I was like, why not just buy here, sell here, buy here, sell here, and so forth. It just looked very predictable to me. So that's what I tried to do. I found out later on that this method of trading is called scalping. I know a thing or two about scalping, just not in the trading world. And it worked. You can see some of my trades here. I did this over and over again, and from this, I made an extra $210. Today we had a little bit of a rocky start. However, at the end of it all, I was able to pull it back, and today we are up around $300. So now we are only down overall about $200. As per usual, I entered a few positions before the end of the trading day, so we'll see how those work out. Oh my god. Okay, we're already up $100 today. God bless. Dude, Starbucks went flying. No wonder. Oh my god, XLE went crazy. And just like that, I'm down $100. Oh my god. Oh my god. Oh my god. Bro, my position's going crazy. My buy-in here was at 127. Should I just let it run? Oh, too late. All good. Yo, I am positive now. $442 made today. Holy shit, that is nice. That I am actually positive, including the commissions. Yo, it only took a whole week. Let's go. Noticing the price action of this contract, I decided to do some scalping here as well.
Order filled. Order filled.
And that's a demo of the I'm just guessing strategy. As a result of doing this, in addition to my other winning trades and positions, by the afternoon, I was up over $1,000. As my confidence for scalping started to go up, I started to increase my position size by a bit. And that's when I was introduced to a concept called theta, aka time decay. This quantifies how much an options price will decrease as the expiration date approaches. Since I wasn't familiar with this, I bought where I normally would have, but because of time decay, let's just say that the price didn't go where I expected it to, and it never recovered. Another lesson learned. But here are the numbers for the end of the week. Today is Friday, and market is closed over the weekend, so yeah, we're not going to be making any trades. So we traded for a total of 4 days with real money, and the results are in. I've made a little bit over $150. I have to admit, this is very fun, very stressful, but I like it. Over the weekend, I worked on my risk management strategy, and here's what I came up with. All of my trades will be sized small. If it works out, I can make anywhere between a 30 to 70% return. If it doesn't, my mental stop loss will be at around a 50% drawdown, which means if I take a $100 position, I'm willing to lose $50 to make anywhere from $30 to $70, maybe even more. As I mentioned earlier, it's very possible to have even 70% drawdowns, but I'll be exiting the position before it even gets there. And if it does happen, there's a chance I will re-enter that trade at a significant discount with a chance for huge gains. Obviously, there's also a chance that the re-entry doesn't work out either, which is also accounted for. I wanted to use AI to analyze the strategy, but first I needed to assign probability values to each scenario. We'll do something conservative, like 50% chance to win, 50% chance to lose, with a chance for re-entry. From both Claude Sonnet 3.5 and ChatGPT 4o, they've both determined that over the long run, this strategy will make money. Now, if the win rates are increased and profit targets are also increased, which is my expectation, then it would be even better. I understand that realistically, this is difficult to implement and practice. So this isn't something that I'm going to hard follow because my decision making for losing trades will be based on context rather than probabilities. I get some peace and understanding that regardless of losing trades, I still should be profitable in the long term. But all of this is only theoretical, of course. Okay, we take those. However, I do have to go somewhere today, so I can't really monitor this as hard as I would want to. I guess we'll just see what happens towards the end of the day. Not too many crazy trades, but either way, ended up plus $175. Our account now is at 28,305. So in total, after fees and everything, we are up $300. Not too shabby. Right at 9:30, everything is so chaotic. It's awesome. Oh! Holy shit, Roku is up.
Order filled. Order filled.
Bam. Roku made 142 off that. Nice. What the hell is going on? Bro, the Starbucks position just went freaking crazy with a gain of 79%. I'm currently up $658 today. Holy. Oh my god. It's gonna keep going up. I'm gonna trim one here.
Order filled.
I have 3 in total. Oh my. Look at that. That is nice. $743. So my account now, after fees and everything, again, we started off with 28K. We are now at 29K. So we made 1K in about 1.5 weeks worth of trading. I like it. I like it. Have been on quite the hot streak, so I'm due for a red day at some point, and today might be the one. But I just feel like I'm doing a little bit too good. There it is. Down 120 right off the bat. But that's okay. Unfortunately today, it wasn't any better. In fact, much worse. By the end of the day, I was down over $420. Most of my positions were still within my risk management framework, but when they're losing, it's death by 1,000 paper cuts, except the paper cuts are $100 losses. Yesterday was a bloodbath. Just gotta win a bit more than we lose, and hopefully today is a winning day. 3, 2, 1, 0. Okay. Oh. I shouldn't get my hopes up too much.
Order filled.
It's the last trading day for the video, so I was also doing some scalping on Meta. I'm basically undefeated scalping, except for that one time, and I made an extra $100 for that. I've entered a position again at 77 cents, and this time it was a bit of a bigger position, and it went down 44 cents. And I feel like I had royally screwed up, but my intuition tells me otherwise, and then it went down to 37 cents. And then something insane happened. Is this glitching? Wait, what the fuck? Is this a glitch? What is happening? Bro, what the what in the actual fuck is that? I'm selling. Trimming a little bit here.
Order filled.
Oh my god. Bro, today was about to be a horrendous day. Oh my god. It's still going. It's still going. I have one left. I don't know when to sell, bro. This looks insane. I actually don't know when to sell.
Order filled.
But wait, there's more. My meta position started to recover as well. If I exit this position, I'm calling it a day. Because today's already been like incredible. So hit this position. I need this to go here. Highlighted. Oh, fucking hell. Come on. Come on, you could do it. Done. Just like that. After fees and commission, I made a total of $1,800 over the course of 9 trading days. My $28,000 balance went up by 6.6%, and if we compare this to the S&P 500, the S&P went down by 1.29%, which means as a complete beginner, not only did I outperform 85% of hedge funds who struggle to beat the market, but I had also outperformed 97% of traders. To be honest, to do that, all you have to do is break even, so that's not really hard to do. That means I'm a genius and I should immediately start selling a trading course. Just kidding. 3 weeks really isn't enough time to come to any definitive conclusions. The studies that concluded the unprofitability of trading or active fund management span between 1 to 3 years. And I'm personally going to continue trading for several months to see if I really am profitable, but by that time, I won't be a beginner anymore. And I won't be able to make a clickbait title as good as how I outperformed 97% of traders as a complete beginner. Furthermore, I wanted to find out if these Discord traders really could outperform what seems to be the whole world in this game of trading. Other than the few times I was scalping, basically all of the trades that I took were from the traders that we hired to our Discord. One thing that I am very impressed by though is how good the trade signals were from Bishop and Mr. M, 2 of the 3 traders that I was using. Flint, on the other hand, was saying that this was his worst streak, and it just so happened to occur at the exact time I was just starting to trade with real money. Maybe it was just bad luck, but I'm not sure what to make of it yet. It was really fun. I now have a newfound passion, so you're probably going to see a lot more trading videos on my channel. And if you're based in the US and you want access to the same information that I used, as well as several more ways to make money online, check out our Discord group, Polar Chefs, linked in the description.